Good afternoon, everyone. Welcome back. I hope you're all doing well today. We are joined today by a returning guest and one of the most respected voices in crypto tax and legal strategy, Andrew Gordon. He's a CPA, attorney, and the founder of Gordon Law Group. He's been helping investors, builders, and crypto native businesses navigate the very complex world of taxation, especially when it comes to cryptocurrencies, compliance, and asset protection. Andrew, thank you so much for taking the time to speak with us. It's great to have you on.
Well, it's great to be here, and thank you for having me.
Yeah, it's been a long time. It's almost 2 years now since the last time we spoke.
Time flies. Eternity in the crypto world.
Yeah.
Yeah,
All right,
exactly.
Vandell, go ahead.
Yeah, so Andrew, thank you so much for being here. You are such a voice of reason in the space, and just so happy that you could come on the show. And I want to start off the question with a big picture perspective. So from your perspective, Andrew, what's the current state of the crypto space at the moment in the US, and especially when it comes to regulation and innovation? So are we making progress? Are we stalling? Are we falling behind? How do you see things playing out as we speak?
Well, I would say overall, it's never been a better time to be a crypto investor. It's never been a better time to be a crypto business considering launching in the United States. For the last 10 years, we've had an environment where the government has tried to effectively kill or crush crypto, right? And this isn't just me being extreme, right? We've had Operation Choke Point where people haven't had access to banks. It's been a regulatory climate where crypto has not been supported. We now, for the first time, have a pro-crypto president. There are people in the administration who believe in the potential of crypto. And so we are on a positive path. There's still a lot of work that needs to be done. And I'm looking forward to talking more about some of those points. But overall, I'm very optimistic with what we have ahead of us.
Mm-hmm. Yeah, it's good to hear, especially for how long considering crypto's been around for. We're talking more than a decade. I mean, and they still can't figure this out. You know, it tells you there's some element of it's by design playing out at this point. But it's good to see and hear from you, somebody that's spending time in DC, speaking to senators to really give us a sense that, okay, there is some progress taking place here. So it's good to hear that.
Yeah. And, over the last few weeks, we saw Crypto Week in the House. Who would have thought that the U.S. House of Representatives was having a crypto week where there were 3 pieces of legislation that were not only voted on, but actually passed, right? One of those, the Genius Act, signed into law. Something very straightforward, stable coins, perhaps one of the best use cases for crypto. But we finally now have a regulatory system for it, where we know that stable coins are backed dollar for dollar with U.S. dollars or currency or treasuries. This is a huge step forward, and it's great that we finally have the attention of people in DC.
Agreed.
Yeah, definitely.
And the Genius Act is really the major milestone in this crypto space. Now, the fact that we have this regulatory environment developing or evolving, you could say, there is another side to this. There's still a lot of fear about asset seizures, regulatory crackdowns, and even potential confiscation, clawbacks. You hear a lot of this on the X community, and we're seeing a lot more investors now on fear, basically asking about setting up LLCs, setting up trusts. So maybe from a legal standpoint, what are the real benefits of those structures? And if you mind also taking the time to break down the key differences between using an LLC versus a trust for holding cryptocurrency.
Yeah, and for years we've had a climate where we've had to fear the SEC, other 3-letter agencies, and this hasn't gone away completely. And so we've worked with a lot of clients to develop structures that help with confidentiality, that help with asset protection, even optimized for taxes. Typically, when an investor invests in trades crypto purely in their name, they're doing so without any liability protections. It's held in their name, and some of that can even be public, right? We've seen a lot of leaks of information, be it through bankruptcies or otherwise, where holders of different accounts on exchanges could be disclosed. Holding it in an LLC, for instance, provides a layer of protection, but also that the ownership is now the LLC. And that LLC name could be anything and not necessarily directly tied to the owner. And so that's one of the benefits of an LLC. Trusts are another area that we've often helped our clients with. And one of the reasons for that is many people are holding crypto not only for their lifetime, but even for their descendants, for their heirs. And having a trust, a structure where it could pass down with tax benefits, and also to make sure that it exists independent of potential lawsuits, right? If you get sued as an individual, if it's held in a trust, there are a lot of asset protection benefits from that as well. A final area that we've been helping more of our high net worth clients with is an offshore asset protection trust. While the US has become more favorable, now is the best time. It's still not perfect. And a lot of our clients want the benefits of diversity of jurisdictions, being able to have their assets held outside the US. And that often can be accomplished through an offshore asset protection trust.
Yeah, and that makes really a lot of sense. But thank you so much for clarifying that. So when you're referring to trust, you're referring to like an irrevocable trust, right? Or a family trust.
That's right. That's right. And those are typically set up at the state level. And so depending on where you live, you'll want to make sure that you're complying with your state rules. But that's where then some clients want to take it a step beyond that, that they don't want to be subject to the state laws. Instead, they'd rather have an international jurisdiction that perhaps is more favorable when it comes to crypto, or even in terms of liability or asset protection. In the US, even if you have a trust, even if you have an LLC, there are still judges out there and ways that those assets can still be gotten at. But by moving those assets offshore, it makes it a lot more difficult to do so.
I can imagine. Final thing on the trust LLC thing. A lot of our clients, for instance, we have very high net worth clients, and we do recommend a trust for them. But when we're looking at ordinary individuals who, are not very high net worth, but they're trying to get there, what kind of protection should they be considering? An LLC?
An LLC is an easy entry point. They're not that expensive to set up. But one of the things that I would consider is that it's not just a matter of setting it up. You have to act like an LLC. You need to make sure that any of your exchanges or your accounts, your wallets, they're all held in the name of the LLC using the LLC's tax identification number rather than your individual social security number or name. And sometimes this is difficult. It's not as easy to open a business account or an LLC account as a personal account. But as long as you follow these steps, it's setting you up for greater flexibility in the future as you accumulate wealth, and even opens up potential tax strategies as well.
And that's why we've been sending a lot of clients to you. You know exactly what you're talking about. You're the best voice in this space, in my opinion. All right, Vandell, please go ahead.
And you've been around for a long time. I was scrolling through your videos, Andrew, on YouTube. I was just scrolling, looking at some content you've put out, and I saw videos going up to approximately 6 or 7 years ago. So it's incredible how long you've been in this space, and I really didn't realize that. To be honest, I thought you just showed up out of nowhere about 2-3 years ago when we found you. But you've been around for a very long time, and it's just remarkable. So, all right. Well, next question. I want to ask you about this. So, it's on policy and action. So basically, you attended the Bitcoin conference, but in addition to that, you recently met with Senator Loomis, and even went to DC for meetings with the Senate and Treasury officials. So I'm just curious, but could you give us a sense of how did those conversations look like, behind closed doors? And whatever you can say, I'm just curious, are these people, in government, are they actually starting to try to make efforts here?
Yeah, great question, and happy to share as much as I can. I was fortunate enough to host a lunch at the Bitcoin conference with Senator Lummis and Senator Blackburn, and a small group of our clients, close friends, to talk about crypto regulations, but most importantly, to share stories. to talk about how individual traders, investors have had to work around the regulations, use VPNs to access tokens they want to invest in. Certain crypto businesses had to be forced offshore over the years. And it was great that they were willing and wanted to listen to our stories, the voices of people that you typically don't get the attention of lawmakers in DC. But they wanted to hear our stories, the stories of what I refer to as Main Street, the everyday crypto investor, the people that are truly building this momentum that we see behind crypto and have been building it for years, for the 7, 8 years, 10 years that I've been in crypto. And so DC has certainly, for the first time, and I've been active in tax policy for several years, but it's the first time where there are people that want to make positive changes. And so we not only shared these stories, but also talked about action items. Senator Lummis had introduced to the One Big Beautiful Bill a tax amendment that hit on many of the issues that our group talked about and were important to us. For example, making sure that mining and staking aren't double taxed. Right now, you're taxed when you earn it, taxed again when you sell it. This is absurd. If you want the U.S. to be the crypto capital, you need to allow us to accumulate, to reinvest in mining or staking, not selling off constantly for taxes. It's just unfair. But we talked about other areas too. For example, if you donate crypto to a charity, if you want to take a deduction, you need to get a qualified appraisal. Whoever wrote that rule knows nothing about crypto. Bitcoin and most crypto tokens traded 24/7 at any moment, the value. But these weren't speculative issues. We shared with them how our clients have actually been audited for these types of problems and how they've been penalized by people in DC, people at the IRS that didn't understand crypto, didn't want crypto to grow, and that we needed these changes to occur. And so we've seen that there are amendments, an amendment that was introduced in One Big Beautiful Bill. Senator Lummis continues the charge. She has a crypto tax bill also that she's going to be introducing in the Senate. So they are listening to what we're sharing with them. Fortunately, it's not just the big banks and the big crypto companies that are getting their attention, but we've been able to provide a voice for the people that you talk to every day, for our clients, the people that typically aren't heard in DC, but are truly building the future of our economy.
Very interesting.
Yeah, it is interesting, and it's good to hear. Swan, were you going to say something?
Well, this is a kind of a funny question, but there are a lot of people who say we don't have to pay taxes. What do you say to those guys who say we don't have to pay taxes? Trump is dismantling the IRS.
I don't think the IRS is going anywhere anytime soon. Hopefully there are changes and reforms that take place, right? And I think that change takes time, but there are certainly some big areas, especially when it comes to crypto policy, that can be effectuated at the IRS. And what we're seeing is momentum towards those changes.
Yes.
I don't think, and I'm hopefully not going to disappoint all the viewers, I don't think that crypto taxes or taxes in general are going to be abolished in our lifetimes, unfortunately. That said, I do think that there are going to be positive steps. Having a de minimis exception where if you sell or trade crypto under a certain dollar amount, you're not taxed. That's something that I think is very real and achievable, perhaps within the next year.
So there's going to be a lot of reform.
Yes.
Well, first of all, we absolutely agree with you, and the data suggests that there will not be an abolishment of the IRS in our lifetimes. We don't think that's happening. The data says otherwise. But to pivot for a moment on my question is, what would meaningful crypto tax reform actually look like in your eyes? Just a few examples. I mean, if you had a pen and a paper and you were in charge here, what would that look like?
Yeah,
because a lot of things do need to be changed.
Absolutely. There are a lot of things that need to be changed. And just starting there, there are maybe a handful of IRS documents or guidance on crypto. Crypto is something that's in the hands of millions of people, right? By some accounts, 30-40% of Americans are holding or investing in crypto, right? It's a large and growing percentage. Yet there's 5, maybe 10 documents from the IRS. Contrast that with something like opportunity zones. I don't know if you guys have ever gone through opportunity zones. 10,000 taxpayers have claimed the benefits of opportunity zones. Not a whole lot of people, right? But there are thousands of pages of rules, guidance, explanations of how to comply with opportunity zones. Number one thing that we need in crypto is clarity. We need to understand what's taxable, what's not. For example, wrapping and unwrapping a token, is that taxable? Going into a liquidity pool and exiting, is that taxable? Right? There are very simple transactions that many people in crypto are going through that we need guidance on. So the number one thing that I'd ask the IRS to provide is clarity. Tell us what the rules are so that we can better comply with them.
Agreed. Do you think there isn't very solid regulatory frameworks and clarity because there's just too many moving parts to this ecosystem, or do you think this is just some nefarious thing by design? I mean, what's your thoughts here? Because look, if they wanted to completely remove you off the web, they could do it overnight. It makes me wonder, why can't they just have some sort of frameworks in place and some clarity? If crypto's been around for like 16 years now, doesn't make sense to me from a logical standpoint. But I'm just curious what your thoughts are.
They didn't want to. They didn't understand crypto. They were afraid of it. They wanted to crush it. And again, this wasn't hypothetical. We could tell from the guidance they didn't understand crypto. Right? Some of the IRS guidance that talks about hard forks and airdrops, they must have heard these words, but they don't actually know what they mean. And then going into a system where there are a lot of guidance on many other issues, but we're not doing it with crypto. We've seen with Operation Choke Point, other government initiatives, SEC's enforcement against crypto companies that simply wanted to come in and comply, that the government wanted to stop and crush crypto. But we now, for the first time, have seen a changing of the guard. We have an administration which has been very active in advancing pro-crypto legislation and regulation. The Genius Act is incredibly beneficial for crypto. It's not perfect, right? There are some shortcomings. I'm not going to be up here and tell you that it's a work of art. You know, there are things that need to be changed, and hopefully over time they will be. But as a first mover, this is a massive step for the crypto industry, and it's getting the attention of DC. There are regulators and legislators on both sides of the parties who are now voting in favor of crypto rules. And so hopefully at the IRS too, we're starting to see these changes. But I think it's been purposeful. They knew what they're doing. They know that crypto is growing, but the more rules they provided to it, the more credibility that it had. If you lay out the rules, the tax rules, accounting rules for a crypto business to hold treasuries and invest, then it makes it easier for crypto business or businesses to do so. Mm-hmm. But if there are no rules, if it's this uncharted territory, it makes it harder for businesses to want to get in as well.
Well, like meme coins certainly should be taxable, in my opinion. I want to shift gears very briefly for more long-term crypto strategies, because for those who really understand this space, they're not just holding the stuff to trade it, to flip it. What they're trying to do, like for instance, with XRP, in my opinion, we have a long-term vision, and some see it as a form of digital collateral, you could say, later on when regulations do evolve. Something that I've taught this on my show, that eventually you will be able to borrow against rather than sell it. So like from a legal tax perspective, how does the strategy of borrowing against crypto later on down the road, instead of actually selling it, how does that work with the current tax system?
Yeah, I'm glad you asked. Often one of the best ways to avoid having a tax is to avoid having a taxable event. And whenever you sell, exchange, dispose, whether you're going from one crypto to another or crypto to US dollars, that's a taxable event. However, if you borrow against your crypto, you take a loan, that is not. So if you use your Bitcoin, Ripple, other tokens, and you use it as collateral and receive a loan, this way you're able to get the dollars or other tokens that you're trying to achieve, but not have a taxable event. Of course, in the future, you've got to pay back the loan. So you need to make your own financial decisions about whether the loan makes sense. But from a tax perspective, If you believe that the prices are going to continue to go up and you don't want to actually sell, you don't want to have a taxable event, taking a loan against it is a often very effective tax strategy.
That's very interesting. Thank you so much for clarifying that, because I did have my own personal questions about this in thesis, but with the stablecoin demand on the rise, I'm talking specifically about RLUSD alongside the Treasury Department. There is going to be a lot of upside to the infrastructure that supports the settlement of RLUSD. So to later on borrow against the Ripple, the XRP, there will be upside to that. So that's a very positive thing I see happening later on down the road. Very interesting for sure. Thank you.
Yeah, Andrew, I was curious, what are some of the most common tax traps for regular everyday investors? Could you talk about that? Just share some things you've seen in the business.
That's a great question. Also, the big stumbling block that I see a lot of investors face is just not knowing how to report crypto on their taxes, or not having the tools that are able to do so. Crypto taxes, if you haven't gotten the message already, they're broken, right? Crypto taxes, they don't make sense. And one of the worst parts about it is that as an investor, you are required to report crypto on your tax returns. You need to calculate your own gains or losses, your income. You need to do all these calculations. You need to report it yourself. And if you do it wrong, you could be penalized or worse. And what we've seen time and time again is that everyday investors want to do the right thing. They want to report on their taxes, but they don't know how, or they run their transactions through a crypto tax software, and the results are not reliable. You look at it and you just know that there's no way that it's accurate. And so just making sure that you have the data, that you either self-report or use a tax professional, because the IRS is getting more information than ever before. While they are paying attention to crypto, which is good, they're also paying attention to crypto, which isn't so good. And that means more enforcement actions in terms of audits, which we've seen certainly an uptick, but they've been focused largely on the people that just overtly haven't been reporting crypto, haven't done their best to report crypto on their tax returns. The IRS is getting information from exchanges that are going through bankruptcy, that are complying with DOJ orders. Exchanges that you would have thought would never provide information to the IRS are now doing so. And so the best strategy is be proactive, report on your tax return. But if you haven't, and you're hearing all this and you're saying, oh, shoot, this could be a problem for me, the time isn't too late. Once you're audited or have a criminal investigation, time's too late. But now is the right time to proactively amend, try to correct your tax returns if you think there are crypto transactions that you haven't reported in the past.
Yeah, a quick follow-up question on that. Very good point, Andrew, and I do agree with you. My follow-up question is, you mentioned softwares and tools. Do you have any recommendations for regular people just trying to at least keep track of their taxes and their crypto transactions? Personally, I use two, but nothing's perfect in this world. So, what recommendations do you have besides working with a crypto accountant?
Yeah, the softwares have gotten better, but they're certainly not perfect. Our firm works very closely with CoinLedger, but there are several softwares out there. And what I would say, though, is once you get to a certain point where you have several different exchanges or wallets, it often makes sense to tap in a tax professional. And what we've seen with our clients is, yes, we're certainly more expensive than a do-it-yourself software, but we can often save our clients a large multiple in tax savings by doing things the right way or using tax optimized strategies.
Yeah, I had a quick question. All these services you're talking about, you provide them, Gordon Crypto, right?
That's right. We have a team of lawyers as well as a team of crypto accountants. They live and breathe crypto accounting, and we do tax returns and generate tax reports for our clients, hundreds of clients every year.
Okay. Yeah, which is very important, because if you just deal with a regular accountant or a CPA, you could miss a lot of opportunity and run into some issues too, because crypto has so many. It's just so new. It's in its infancy stage that if you're not working with a professional that understands the crypto laws and regulations that you could, I guess, miss out on big savings as well.
Absolutely. And I would say that more often than not, the clients that we represent in audits, people that come to us once they're audited, they previously had CPAs or accountants help them with their tax returns, but they're still being audited for crypto because they either didn't get the right advice, didn't get any advice at all on crypto. And this could be typically avoided if they had just better advice in the beginning.
I mean, if you're in the crypto industry, I mean, people make a lot of money in this space. Otherwise, they're not selling. So they might as well just pay the fees to get the services done the right way.
I couldn't agree more. You should be on a commercial for me. Thank you.
Hey, I'll consider it.
Well, no, it's true.
It's
I mean,
fun.
your work speaks for itself, and your whole firm. I mean, yeah, you do amazing work. And as people know, we tell a lot of our people in our communities and groups that we are planning to work with you when the time is right, which is we're nearing that point very soon. We're preparing our data and documentation and everything. But another follow-up question, I just want to pivot for a moment. Speaking of the simplified reporting in in the crypto area is just clearly a mess. And I know you've spoken about this before, and exchanges aren't issuing proper tax forms. And it sounds like users are expected to pretty much figure it out all themselves. So my question is, do you see this getting resolved anytime soon to where there's more of a streamlined process here?
For better or worse, starting with tax year 2025, which will begin in 2026, U.S. exchanges are required to start sending tax forms to their users. And this was very controversial. It was an effort at the Biden administration. But what we're expecting is that the large U.S. exchanges, the ones that people are interacting with, are going to be issuing a 1099-DA. In theory, this should be very similar to what brokerage accounts issue when you trade stocks, where it has all the tax information you need in order to report your taxes. If you're trading on Robinhood stocks, for instance, you don't need to go to a stock accountant. What's a stock accountant, right? It doesn't exist. Right? But yeah, got to go to a crypto accountant because no one knows how to handle these things. You got to generate a fancy report. But the goal is that the exchanges start to generate these reports for us. Unfortunately, crypto, you know this, crypto is not like stocks. People don't trade crypto like they trade stocks. Yeah, you buy and sell, but I think the similarities stop there. It's crypto 24/7, and people don't move their IBM stock from Robinhood to Morgan Stanley in order to trade at a better price. Like no one does that, right?
Of
But
course.
but with tokens and Bitcoin, you're moving from wallet to wallet, exchange to exchange. You're not holding it in the same place, and that's the problem with tax reporting with crypto. And if you're just forcing the exchanges to report what they see, what they're only going to have is part of the information. So over time, I'm hopeful years from now that the tax reporting can be done for the individual investors. But in the short term, it's going to be a bit of a nightmare where the IRS is going to have a fire hose of information. They're going to be getting so much activity from these different exchanges and brokers, but at the same time, it's not going to be enough on taxes using just that report. So you'll still need to be using software. You'll still need to have a professional, but now the IRS is getting a lot of that data as well.
It's a very good point. I had just some very basic, quick questions we get quite often from our clients. If you were to purchase a digital asset, for instance, that is not, number one, a taxable event, right?
As long as you're purchasing that digital asset with fiat, with US dollars or currency. If you're purchasing that digital asset with any other digital asset, that is a taxable event.
You mean like converting, right?
Converting, correct. Say you want to buy some meme coin, but it's only accessible on a wallet and you need to transfer Ethereum there. Once you exchange that Ethereum for that meme, you've got a taxable event.
If you were to certainly just convert an asset that has increased in price significantly into a stable coin, that is considered to be a taxable event.
Absolutely. Absolutely. If you're
Understood.
going from any token to another token, there's no like-kind exchange or anything like that that applies to crypto, even if it's not cashing out, which is a question that I'm asked all the time. I haven't cashed out yet. I don't have any taxable events. No, that's unfortunately not the way it works. Every time you trade or exchange or convert from one to another, even if it's to a stable coin, especially if it's to a stable coin, it's a tax.
Because it's like now killing the volatility and you're holding a 1-to-1 ratio with the regulated dollar, essentially.
That's
So
correct.
yes, it's considered to be taxable. That makes sense. Thank you very much for clarifying that. Sometimes the simplest questions, are the ones that really frustrate people the most.
Absolutely.
So I have a follow-up question on that. So if someone sells a significant amount of crypto, let's say $1 million, and they immediately reinvest it back into the market to buy a different cryptocurrency, basically shifting from one asset to another, that still counts as a taxable event. So you made $1 million, but you have zero now because you invested it all back into crypto again. You still have to pay the tax on the million, right?
That's correct. And what we've seen right now, we're in an appreciating market where hopefully by tax time, prices will go up. But what we've seen historically is sometimes prices does go down in crypto. And if it goes down, you still owe that tax on that initial gain, especially if it was in a different tax year. So to the viewers out there watching, an important thing to do is estimate your taxes periodically through the year. See, when you accumulate all your gains and losses, are you up? Are you down? What is the tax I already owe? Because another great strategy that could be used is to perhaps harvest losses. Maybe there's another token that you're still holding that's at a loss, and you can sell that and use that loss to offset your gains and reduce the taxes that you'll have to pay.
Can you elaborate more on that just for the audience so they could have a better context for how that actually works in practice, if you don't mind?
Sure. One of the most effective tax strategies, but also is quite simple, is tax loss harvesting, which refers to selling tokens or crypto that you bought at a higher price than it is today, meaning that you have a paper loss. And if you sell it, now you've actually realized that loss. That loss can be used to offset or reduce dollar for dollar other gains in the current year. Even if it's a different token, even if it's a stock, it can still be used to offset or reduce those. And if there are no gains in the current year, it can be carried to future years. They can't be carried back. So a strategy often is try to accumulate those losses if you think you'll have gains in the future years as well. But they can be carried forward. They also offset income, $3,000 a year, not a whole lot, but worth mentioning. Otherwise, I'll get a comment that Andrew didn't mention the $3,000 a year ordinary income. But it's very effective with crypto. And what makes crypto different than stocks is that there's a loophole. And this loophole is likely to close. I'll talk a little bit about this as well. But with crypto, you can sell it at a loss, realize that loss, and then buy it back even that same day. So if you want to be long, and for example, XRP, but it had a bad week or day or month, and it's down, you can harvest those losses, buy it back, and now you're back in that same position, but you have a tax loss that can be used to offset other gains. With stocks, it doesn't work that way. That the Congress implemented a law that said that if you sell a stock and have a loss and you buy it back within 30 days, it's referred to as a wash. It's a wash sale. And you can't take that loss. You've got to wait 30 days in order to buy it back. The way the code is written doesn't apply to crypto. It's one of the few times that crypto actually has something positive in the tax code. This loophole is likely, perhaps even certain, to close in the near future. But at least now and for this tax year, you can sell your crypto at a loss, then still buy it back and still have that loss.
If I may make a suggestion real quick, I think the smartest play here until we have a certainty around the regulatory frameworks is just hold your assets for a very long time and just pray that the inflation doesn't wipe you out, because The truth is, with all the government spending, and this is a whole different subject, they're going to have to raise taxes on us eventually. That's just how the financial system works. So the smart play would probably be to hold your assets, and the right ones, of course, and try to stay away from meme coins that have extreme volatility and are very violent, I would say.
Well, holding historically has been a great investment strategy. And going back to what I said in the beginning, now is the best time that there's ever been to be a crypto investor. We have the signs of regulatory clarity. We're seeing adoption globally of crypto. And it's finally becoming institutionalized. We're seeing banks and large players that are warming up, that are accepting crypto businesses that want to hold crypto treasuries. Who would have thought that there would be all these Fortune 500 companies that are holding Bitcoin on their balance sheet? So there's all these positive indications. I wish I had a crystal ball for investing, but there seems to be a lot of positive momentum ahead of us.
First of all, that's a short right there. But I had a question. What about some of our clients, for instance, that are outside of the country? Do you guys at Gordon Crypto specialize in other jurisdictions?
We only help U.S. tax persons or citizens. Often our clients live throughout the world, but we focus on the U.S. tax code.
Of course.
Okay.
Yes.
And
Thank
yeah, good information. So yeah, so how should someone prepare for tax season? Just put simply, if they're active in crypto year round, but they just usually accumulate, and they want to prepare and do things right. So um, simple tools. I know you mentioned one such as Coin Ledger, different strategies. Any ideas you have just to get them going on the right track?
One of the most important things you can do is download and save your transaction reports and data regularly. Exchanges, wallets, they unfortunately come and go. Even we've seen exchanges have provided information to the IRS, but don't allow their users to download the data. Absolutely crazy.
Yeah.
It's unfortunately on us as the investors, as the traders, to be responsible for our data. Download it monthly, download it quarterly. Make sure that you have a local backup of your transactions so that you can get ahead of the accounting. It'll also make things a lot easier at the end of the year when you finally have to do your taxes. One of the most difficult parts is getting all the data together. And if you've already started to do so or have it all ready to go, it'll definitely put you ahead of the curve.
Yeah,
That's very good information.
definitely.
Mhm.
I had one final question before we wrap it up in the next few minutes, but this is more personal, but if you don't mind, Andrew. So what made you get into crypto tax in the first place? I'm just curious.
Yeah, well, happy to share. So I'm an attorney, also a CPA, master's in accounting before I went to law school. Tax is my background, but at the same time, I've always been very interested in emerging technologies. And when crypto and Bitcoin specifically was first introduced, I was an early investor. I wish I still held much of that. Have an island as my backdrop instead. But I believed in the technology. I saw the internet boom and how the internet revolutionized the world. And I felt that Bitcoin and blockchain technology has that same potential. Yet over the last 10 years, compliance, tax has been a thorn in the side of every investor. It's made it difficult to invest, made it difficult to launch a business. And so it's an area that I thought that I could add value in this emerging area. And hopefully as crypto grew, that I could grow with it.
Yeah, I love that. Well, we're certainly still in the infancy stages of this development and this blockchain disruptive technological revolution. But we're certainly starting to, see rapid development in the space across the board, whether it's CBDCs, stable coins, or real use cases for businesses building out, and certainly for investors too. Um, if there was one thing that you feel policymakers should hear, what would that be? What do you feel they should know about this space?
First of all, I think it's important for policymakers to hear the voices of the everyday investors, traders, small crypto businesses, the people that are trying to accumulate, build wealth for themselves for future generations. It's important that as crypto grows, gets the attention of DC, that these voices are not drowned out by the big banks, by Wall Street. That unfortunately is what often happens with new technology. We need to make sure that crypto doesn't follow that same pattern. The entire purpose of crypto blockchain is to put it in the hands of everyone and to not empower the big banks. We need to make sure that regulators follow that. And one of the ways to do so is to make sure that our voices are heard. And that's something that I'm very passionate about, and trying my best to make sure that people in DC hear from my experiences and the experiences of people that I work with. But from there, that we want rules. The crypto industry wants to do things the right way. We want to know what's in bounds, what's out of bounds, how we can invest legally, how we're taxed. We want all of these things. We believe that crypto can create wealth for generations, but in order to do so, that we need these rules. I couldn't have started my own law firm or accounting firm if there weren't rules on how to do so, right? If we want the US to be the crypto capital of the world, we need to create a climate where crypto businesses can be launched and grow. And right now, we don't have that.
Yes, indeed. You're right. Absolutely.
I had also one final question. As regulations, you mentioned Wall Street, and we do see Wall Street getting their hands into everything now, something that was supposed to be free and decentralized, really. It's gradually becoming more centralized, if we're being realistic about the situation. They have their hands in everything, BlackRock's involvement, we can go on and on, International Monetary Fund. So as the regulatory landscape does evolve, let's hope for the positive, but a worst case scenario. And I try to look at the best case and the worst case to understand how things are going to play out later on, trends forecasting, if you will. Do you think that there's going to be eventually a clear separation between what institutions are allowed to access as far as private cryptocurrencies, let's say, and what retail investors are going to be restricted from, almost like a two-tier digital system or financial system?
If I have any say in it, that won't be the case. But what we've seen historically is that there is a difference in access. It is shocking and quite frankly absurd that in most states, many states, you can legally gamble, but you can't invest in a startup because you don't meet the accredited investor standards, right? And so historically, we've seen a system where access to emerging investments are restricted from everyday investors, from small investors, from young people who want to get access to these types of investments. Crypto has not been that way, right? Through different token launches, it's been about access. But we've seen issues that have arisen as well, where tokens have been delisted, where you've got to move to an offshore exchange and use a VPN in order to access tokens. My view is that the government shouldn't tell people what they should or should not invest in, shouldn't tell people what they should or shouldn't do. We need to make sure that it is decentralized, that people have the opportunity to invest in whatever they want, and that regulations support the ability to do so. Don't have arbitrary rules on the amount of income you have to have in order to invest and meet the accredited investor standard. If I can go gamble on a sporting event, I should be able to invest in a startup or a crypto company.
I agree.
We couldn't agree more with you. Absolutely.
100%. But the reason I asked such a question is because, Vandell and I, we do a lot of research under the hood, I would say, from the UN, the IMF, and the BIS. And it would seem that when it comes specifically, I know I talk about XRP often. That's really what I like to talk about, because I think it is the most critical aspect of this landscape, the very infrastructure behind all of it. It would seem that they are going to eventually use XRP as a new source of liquidity to create the demand for engineered demand for fiat currencies around the world because they're all losing their purchasing power. That's why I asked that question, because I think over time, whether the IMF has some involvement, and there's clear indications they work with Ripple at the highest levels of this fintech space, that they may use as an ESDR, electronic special drawing rights. And if such a situation did happen, my final question I would say is, like, the people who are holding on to these assets for long-term growth, is there any way they could confiscate this stuff?
Gosh, one of the biggest concerns with the CBDC, which fortunately Congress and DC has largely gone away, is the government controls, the ability to confiscate. And one of the policy points that Main Street that we also need to fight for is to make sure that individual investors have the ability to self-custody. We take that for granted right now, right? But that's a foundational principle for cryptocurrency, is the ability to hold your own cryptocurrency without an intermediary, without a bank or someone else holding your private keys. And so that's something that we certainly need to make sure is protected, because with that we then have certain checks in place against confiscation.
Yes, I totally agree with you. And what I've been fighting for forever, and this is why I teach all my clients the importance of self-custody, because I see a lot of fear in the space of confiscation. And that's why I asked about the trusts and LLCs, because it seems people are now looking to third party because of this fear-based clawback. But then we're losing something very special here, self-custody, if everyone kind of follows that fear and embraces a third party. Now banks are asking you to custody with them. That could be a problem later on. That's the easiest way they can confiscate your assets, if you think about it. I'm going to be paying really close attention to the details here of how this is evolving. And I would love to have you back on the show again. Not too long, like 2 years. We're not going to do that again. We need to bring you back on in the next few months, I would say.
If anybody's wondering what that's about, we spoke with Gordon on the channel almost 2 years ago. So yes, it's been a while. Andrew, any last thoughts? Anything you'd like to say before we wrap it up for viewers, people in the crypto space?
Yeah, so now is an exciting time, but we need to keep that momentum going. We need to make sure that DC continues not only this year, but future years to regulate reasonably crypto and make sure that crypto grows within the United States. And so if you're out there, please follow me, support our movement, because crypto, we all know, has the potential to change the world, but we need to protect it and promote it.
Vandell, do you have any final words?
Yeah, I just want to say this is very insightful. It's been a remarkable information you provide, Andrew, and we sincerely appreciate your voice in the space and everything you do and fighting for the crypto community. So again, thank you so much, Andrew. And we'll be sending everybody your way. If you want to follow Andrew, you could follow him on YouTube. They have the YouTube channel. He's very active on X, which known as Twitter. And we'll put his links in our description of the video for his law firm based in Illinois. And you can reach out to him through his website. Thank you, Andrew.
Thank you both very much.
Okay, we'll talk soon.